Every market in America has a story, and we built renterswarehouse.com so that the story can reveal itself to you. And so I want to show you what I think the story is about Colorado Springs and how it ties itself to the fundamentals of Denver. But I'm encouraging you to go. It's free. The data that we compile in this system and the intuitive nature of how to let the market speak to you and see what hits you just right in terms of a place to invest and learn more about. Go to renterswarehouse.com, and I hope you enjoy the segment. What I'm all about with this stuff is really understanding the real estate market. Okay, I have a keen understanding of it nationally because I've been at it for a long time, and I've got all this beautiful data visualization that I'm going to show you how it speaks to me and how it tells a story. And it centers around the idea of what's the ROI of America. I'm not being philosophical when I say that we sell America. You're investing technically in pieces of the country. Okay, it is valuable. The value of it has tended to go up over time, forever actually, except for one time. And if you rent it out, you generate income. And as the country attracts population and grows population, it continues to thrive, which it always has, and I believe it always will. It's the best product known to man. But here was the nature of the topic. Where should we go to invest our $200 million that everybody isn't already crowded into? All right, so the SFR, the Wall Street SFR industry jumped all over Charlotte, Atlanta, Jacksonville, Tampa, Orlando, Dallas, Houston, but they crowded it out. These are companies that each own 1,000 or more properties. So as is appropriate, people are saying, well, wait, that's not the only place that I can go. Why don't I go somewhere where I can be a big fish in a small pond? What are the next cities that are going to pop? And we are experts at this conversation. This is the long-term price appreciation chart that I absolutely am in love with. I've been following this for a very long time. I've shown this to you before because what this shows is the blue line is America, the black line is Colorado, the green line is Denver County. But here's the big real estate boom. Here's 1996, 2002, 3, 4, 5, 6. It comes back down, then it fights its way back and recovers. But that's the housing boom, housing bust. The last 20 years is a great chart because it's a stress test. Good times, bad times, high rates, low rates, wartime, peacetime, Democrats, Republicans, housing boom, housing bust, housing recovery. How did the market fare? And we actually track that the United States for the last 20 years has returned a 4.02%, call it 4, annual appreciation rate. State of Colorado, 4.5, County of Denver, 6. That's a big increase over 4. That's a 50% increase over 4%. And you can see that it really was stable and steady and kind of tracked a little better than the national average, and then off it went. And I'm real proud of the fact that I called that in 2012, that something's going on in Denver. It's been great. It's greater now. It's going to take off. And it did take off. And the question is, if Denver, those of you in Denver, you know it's hard to generate a yield in Denver right now, but you've got to find pockets in Denver where you still can. Okay, this concept of late bloomers. There are markets develop at different paces. Okay, so, and you probably know this, if you look at any suburb, different areas of the suburb have matured at different paces. So like I look around, I grew up in New York, okay? New York is a very old city. New York used to be Manhattan and then the boroughs around it. So Staten Island, Brooklyn, Queens, and the Bronx, right? And then it went out to the suburbs, the counties that were on the ring around New York City. That was where the cheaper deals were, okay? Each of those suburbs developed differently. Some of them were luxury, some of them were working class, some of them were poor, some of them were middle class. It just developed differently. It had to do with transit, it had to do with developers and politicians working together. It had to do a lot of things that were not even, right? So Rockland County, where I grew up, the average sale price was 250 grand, and Westchester County, right next door, was 400. Why? There were reasons, but it was undeniable. Then what happened is a lot of the companies that were based in New York, who had very high cost of rent, moved out to the suburbs, which created a two-step, and there were now people that were willing to commute 45 minutes to go to work. I'm actually off the screen here. So two-step, companies go out here, so the commuters that lived here moved out here. And all of a sudden, that second ring of counties outside of New York began to develop, and different ones developed at different paces. And just any city you're in, think about that, right? So we go around Denver, and I can find places in Denver where the average price is $350, and I can find places where the average price is $275. That's going to be the place that the yield is going to be found if there is one. And it's likely that the fundamentals that drove this suburb, that suburb, and that suburb are going to eventually drive this suburb. So you're not taking a big risk by predicting and making a bet on that suburb because it's just a late bloomer, right? Just a late bloomer. So that principle of markets that evolve and mature at different paces also holds true for entire markets. So here is Colorado Springs. Look at the green line in Denver and Colorado Springs. They are practically identical up until the point where Denver took off like a bat out of hell and Colorado Springs just didn't do that yet. Okay, so it just looks exactly the same except for what happened in the last 7 years. So my delusion is that Colorado Springs' fundamentals are identical to Denver's fundamentals, and Colorado Springs is going to be a late blooming market, and there are other places outside of Denver. So Denver's strength is the fact that it's a phenomenal place to live, raise a family, stay in shape, and get a good job, right? One of the things that I love about all of this is that it always begins with data, but it always ends with quality of life, because the demand for property is what makes it more valuable every year. The demand for places to live is what makes rents stable and occupancy stable. And so if you've got population growth, you've got housing demand, period. It's not complicated. So then why are people moving there? Why, if they're there, are they staying there? Is that likely to continue? If all the answers to those are yes, you've got high quality of life, reasonable cost of living, you win. But if you had reasonable cost of living, people in Denver, is the cost of living in Denver getting higher? It is, right? So if the cost of living is going up because the cost of housing is going up, and the cost of a hamburger is going up because the cost of rent on that restaurant space is going up, the cost of living in these places tends to go up when the values go up in real estate. So great place, fresh air, lots of jobs, young people, wonderful lifestyle, high quality of life, low cost of living. Oh, wait, not so low anymore. So what's nearby that has all those things and still has the cost of living in its favor? Colorado Springs. Look what Denver did. Here's what I think Colorado Springs is going to do. If I'm going to take one slide to talk about jobs, I want to talk about job diversity, because people make assumptions that certain industries dominate certain cities. Sometimes it's true, other times it's not true. Okay, and when you see a pie with lots and lots of slices, you can feel comfortable that in this case, you know, in Denver, a rocking city, professional and business services is the #1 job category. See it right here? I can't zoom in. Yeah, I can. Okay. Trade, transportation, and utilities, #2. Government, #3. Education and health, #4. Leisure and hospitality, #5. Financial, #6. I go over here. It's government, professional, trade, education, leisure, financial, almost the same order. Government is a little too big for, it's #1, but not by much. And anyway, it just gives you the ability to maybe bust a myth. Like anybody here in Houston, how many times have you seen articles in the Houston Chronicle talking about, oh, gas prices are down, and so Houston's over. It's over for Houston because gas price or oil prices are down. The oil industry is going to get slaughtered, and Houston is done for. And Houston's never been done for. Houston is totally diversified. The oil industry is a big industry. It's not the only thing going on down there. And they've made fools of themselves every time oil prices go down. The Houston Chronicle makes idiots of themselves running stories about how the industry is too dependent. Let me show you. I'm going to go to the Investor Marketplace Research Center. You can also get there by going to renterswarehouse.com/research. And I'm going to put in Harris County. So the first thing I get is going to be the data on, and I know Houston's messed up, so not as a place, but as a data set for price appreciation. Harris County? Is it in Harris County, Texas? So I think the price appreciation chart's going to be messy. Oh, no, okay, we fixed it. All right, so you can see that it's off the charts, okay? I don't trust this last year, so we have to make some fixes to this. But what I wanted to show you was job diversity. Headline, oil prices are down. Well, the only thing Houston has going for it is the oil industry. Here's the job diversity. Trade, transport, utilities, #1. Professional and business, #2. Education and health, #3. Government, #4. Leisure, #5. manufacturing number 6, construction number 7, financial. Oh, here's natural resources and mining. So drilling for oil is 3.9% of the economy. Obviously, trade and utilities is also fed by the energy industry. Obviously, business and professional is also. But you would see people say, well, the price of oil, and so the refinery business, it's number 9 or something on the list. Okay? Mythbuster. Oh, the last thing I did was population change. I'm going to go back to the big PowerPoint here. So I'm going to fly through these to give you a sense of how you can tell these stories. So I started with price appreciation. I think it's going to follow along. Job diversity, very similar. Population growth, very strong. Population growth equals housing demand.